Hello friends, in this video I will talk about efficient and inefficient price moves. Price moves in trends in different ways. It can move efficiently or inefficiently. Balanced price moves or imbalanced price moves. So what is the efficient price move? This is a typical efficient price move. I'm demonstrating it on your USD 1-hour chart. When price makes retracements and fills all the price gaps, all the skinny legs, you see it moves forth and back, 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 forth retracing. And then all of a sudden we have inefficient price move when it drops all of a sudden. Quite volatile moves. Those are called inefficient or imbalanced price moves. Here you see another example of inefficient sudden price move. Those are also called price gaps. Price gaps in forex are not only literal gaps when you see a gap sometimes on Monday after the weekend, but and they usually get filled. But we also call those moves as this one you see of 122 pips price gap. This is a price gap as well. And those skinny moves, price gaps, skinny lags, inefficient price move, imbalanced price move, they tend to get filled. Price retains back to the same area and then starts to move efficiently through this space of inefficient price moves. It tends to fill this. You see here it was retracing and trending, retracing and trending, moving efficiently through this area of this inefficient price move, and it forms altogether this kind of fractal where you have several elements as taught by Chris Laurie. You have clean breaking point. This here shadow on the top is called clean breaking point. Also this is clean breaking point, another point through which price breaks through, the imbalanced move starts through. Those are quite reactive points, those clean breaking points, as you see. And we have an apex. In fractal we always have an apex or the top. We also have a shelf. This is called a shelf. This retracement of 225 pips during the imbalanced price moves, when price suddenly stops and retraces. That is called a shelf, and those are quite reactive point areas as well. Here when we hit the shelf price, you see reacted and was moving efficiently along this shelf. So then when price completes the fractal, it either will bounce off and form a new fractal, or it can break through and trend in the opposite, in the different direction, in the opposite direction as it happened, forming then fractals which are upside down, as you see here, or you see fractals all over the chart. Those tiny triangles with retracements, they are called fractals. Fractal nature of forex market. Efficient price movement, you see, this is altogether, this is efficient price movement. Price was going up and down, moving efficiently. Then we have inefficient, imbalanced price move, price gap, which gets filled. You see price moves back and fills this price move to the point of release of this inefficient price move. This is the point of release of this inefficiency of 177 pips, and price came back and filled this move. In violent uptrends, as you see here, we had an uptrend. Price still was filling those imbalances. Here it's imbalance, one imbalance, another imbalance, and the price retraces back and fills it. It moves into the new territory above the last high, and usually it comes back and fills it back to the previous high. Sometimes it can go deeper and fill it all the way to the clean breaking point. You see, here we have very clear inefficient move, and this is point of release of this move is here. You see this all inefficient price move. It was filled as well. Price, you see, returned. It started here, making the base or the apex, depends on what side, and then it pulled back and filled all this inefficiency, all this skinny leg, the gap, and at the same time it formed another inefficiency. You see here there's another inefficiency. Those are thin liquidity moves. Price can't find enough liquidity to fill their orders, and it moves very rapidly in one direction, but when the market comes down, then it usually returns from where it left. You see, it returned back here and filled all this inefficiencies. This price gap got filled to the clean breaking point. You have to watch the bodies of the candles here. This is real a real clean breaking point. Reaction points are the bodies, not really the shadows. So here you see it filled exactly to the clean breaking point, to the bodies from where it broke through this movement, and then it's reacted here, formed a new fractal. So this is a fractal, there's another fractal, this is a fractal, this is a fractal. You see, and then you have tiny fractals, one tiny fractal, another tiny fractal, minor fractals. If you can zoom in and you can see them on 5-minute charts. Here you see a fractal, then another fractal. GBP USD is moving in fractals very much, and it feels all those inefficiencies. Not always they get filled. Like this one, I don't see that it was filled. Maybe it was filled eventually. Yeah, it was filled eventually, but it took a long time. So here you see an efficient price and moves back efficiently and fills it, you know. Usually the inefficient price moves, they tend to get filled. Now in Euro USD, yesterday we had inefficient move. Price moved very rapidly. It moved 90 pips. And today on Friday you see all this inefficient move got filled completely. You see, completely to the point of its release, price returning back to the point of release of this inefficient price move. At the same time, it formed another inefficiency. If it would move here efficiently, you see, with retracements, there would be a chance that price wouldn't return to fill this. But since it moved inefficiently, we have again a chance that it will return and fill this gap, fill this thin liquidity move. So here you see another example. Price push it back inefficiently, imbalanced price move, and then it was filling it efficiently. You see, it was pulling back, retracing. It filled all this inefficient price move. It came back from where it left, back to the base. Back to the base. Now I will explain you what are the order blocks. Those are the tops and bottoms of fractals, basically, where a price releases, let's say, and where a price reacts. So here you see the inefficient price move, 570 pips, price move to the top. And this is the first candle. Chris Laurie calls this is the base. This is the base. ICT named it order block. This candle, Chris Laurie teaches that this is like the bigger base, like not specifically one candle. He would define all the structure as a base, this big chunk of price as a base. But Chris Laurie specifically goes to one candle. This ICT goes specifically to this one candle, calling it order block as a reaction point when price returns back to fill the fractal, to fill this inefficient price move to complete the fractal. So this fractal got completed, the inefficient price move got filled all the way to the base, to the order block. When you show the reaction, you see price here reacted, started retracing, it's kind of broke through, and then it started moving. It eventually broke through this fractal and formed a new fractal, upside down fractal. You see inefficient price move, then efficient filling of this price gap. It moves back and fills efficiently. So what is going to happen here? We had inefficient price move. Now price will trend up very slowly with retracements, up, filling this inefficient price move, this price gap, skinny lag, price imbalance, whatever you call it. For ICT, it is price imbalance. For Chris Laurie, it's skinny lag, price inefficiency, but he also calls it price imbalance, or simply a gap, price gap. Here we had the price gap, which not got filled, and in violent trends, we do have unfilled price gaps, especially when they are within the prior range, not in the new territory. You see, this price gap was within the efficient price area here. Price was trending before moving forth and back, but imbalanced price moves and inefficient price moves in the new territory, where if you look to the left, there was no price action to the left, and you just have one skinny lag. Those get filled. The inefficient price moves in the new territory, where there is no price action to the left, those get filled. Usually price returns back and moves efficiently to fill them. It retraces to fill them. You can call it also impulsive price moves and price corrections. Corrective price moves can be called efficient price moves, and impulsive price moves can be called imbalanced price moves or price gaps. So various names people use for this phenomenon in forex. I just explained this on a plain vanilla chart. Here you see a typical fractal. You see price formed as sort of a pyramid. It moved inefficiently up, formed an apex, double top. Usually apexes, the tops are like of fractals are double tops or head and shoulders. Efficient price movement on the top of the fractal, and then price was moving efficiently, pulling back, retracing, and it was moving along this price gap. The format imbalance, it filled it completely all the way to the order block. This candle ICT calls an order block, this base from where the fractal formed up, and there we had the reaction at this base. Precisely here you see those bodies of the candle. There is the reaction point of let's call it, Chris Laurie calls it simply a base, those bodies of several candles that are conglomerated together. The junk, this candle junk here, it is a base. ICT renamed it into order block, and he chose just the last candle, the biggest candle before from which the movement issued. So this is the order block, and price came back and it reacted at this candle. You see at the middle of the candle, ICT even uses specific levels of this candle as a reaction point, like the middle of the candle. But overall, it's simply base, price base, fractal base. That's how Chris Laurie, you can watch some Chris Laurie videos on YouTube. So price reacted at this price base, at this order block, whatever you call it, and it started moving up efficiently. You see it started moving up efficiently with a retracement. There was some inefficient price move here, a skinny line gap, and then when it came back to this skinny leg, it was moving efficiently. Then formed another skinny leg. It completed the fractal. You see this fractal was completed and it was broken. There was a reaction at the base, but it wasn't some pullback of some 20 pips, not significant reaction. So it's not guaranteed this order block will be a reaction. It will be some reaction, but it can be broken. Fractal can be broken. They are not in GBP USD. They're very good fractals. I mean, price does respect fractals in GBP USD. And you see they can be of various shapes, they can be also of prolonged shapes. You see here we have a kind of extended pyramids, extended triangles, extended fractals, you see. And if price move violently, those fractals not always get filled. So you shouldn't just rely on this like 100%. You are sure that every fractal, every inefficient price move will get filled. But you see this big fractal eventually here got filled with a few inefficient moves down, and we got this fractal, this kind of pyramid, this kind of house. So price moves in fractals, you can easily detect them inefficiently or efficiently. If it moves inefficiently, it will usually returns back and fills the price gap in an efficient way, inefficient movement. That's how I understand it. That's how my understanding of Chris Laurie teaching about fractals and efficient and inefficient price movement. Hope you understood at least something what I tried to transmit to you, my knowledge. Wish you all the best. Success in your trading. God bless.